Welcome to another episode of the Jason and Bart Show. Hey, Jason, you're back.
Hey, Bart, I'm back. How you doing, buddy?
Doing.
We're all doing.
We're doing. It's cold. You came back to the cold. You didn't bring any warmth. I don't like it.
I did. I wasn't expecting all the snow we would have all winter to be in the last 24 hours.
We got a little bit of it's just really cold outside. That's pretty much it.
Windy.
Yeah.
Windy.
Yeah. Speaking of windy.
Yeah, what's going on in the world? Which way are the winds blowing, buddy?
I don't know. I mean, some fun news this weekend, huh?
Some fun news. Yeah, I think we're going to spend a few minutes today talking a little bit about, what's going on in the in the banking world, and certainly how it relates to those of us in the digital agency space. Probably both seeing it. I don't know about you, but I think we're seeing it on both the vendor side, right, in terms of vendors or even clients who may use a particular
service
platform or service, right, that was funded by Silicon Valley Bank, or one of the other banks that also went under this week, like Silvergate or Signature. Those probably a little bit more around crypto than SVB, but yeah, and so we're dealing with a little bit on that front. Although I have to admit, I think one of the first things we did was check in, do a quick audit of who uses what service to pay us, right? And make sure that we understand our receivables exposure, our risk exposure on the receivables side first. Obviously, as a business owner, we want to make sure we're meeting our fiduciary obligations, but receivables certainly outweigh payables for us. How about you?
Yeah, I mean, we use Bill.com, and that.
Okay, so there you go. Yeah, that was quite definite. You use Bill.com to pay to do your payroll or to pay vendors?
I mean, to pay some vendors, but also receive from clients. So lucky for us, it wasn't, nothing got caught up in it. But that was like the first thing I looked. I mean, from like the e-commerce space, Shopify got caught up in it, and so did Etsy. So as much as people talk about, VCs and who cares and stuff like that, people got to realize a lot of these startups and a lot of these payroll vendors do use banks like that, especially in the startup world. So, when you can't process stuff on Etsy, that means small, tiny shops can't get paid. I mean, that's just, that's the reality of it.
Yeah.
All the pundits and everybody on Twitter can be like yelling on stuff like that, but then you have to realize what's actually happening, right?
Well, I think that was what was fascinating about it, was it seemed almost like a social media classic pump and dump almost, right? Where a lot of the very famous venture capital folks out there, I was watching a couple of people talk about this, and they said, it's very interesting. If the reaction of the first couple of people had been entirely different, if they hadn't completely overreacted, gone on social media and basically put out there for the world, and then basically told, and these are obviously large players, and basically had told all their portfolio managers to pull the money as a reaction. By the way, well after they all got their money out. Let's be clear about that. And that's why I call it a pump and dump, right? So it's like, oh yeah, well, we knew SVB was taking these, being very risky with their arbitrage and putting their things into long-term treasuries, despite the fact that macroeconomic environment's been changing for over a year now, and yada, 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 and interest rates and all the rest of it. But there were plenty of people getting, wealthy for a period of time off of that. And then right at the breaking point, right before that, of course, it's suddenly like, oh my God, we just woke up and realized all this was happening. Let's make sure to get our money out. And of course, what happens is then the run starts. It was like a social media run. And it's hard to blame people for sitting there and going like, well, I don't want to be the last person sort of,
or be stuck with it. Yeah.
Right. Exactly. So I, what actually happened was really what was interesting, and I think what was different about it was the speed in which it happened. And this is the new world that I think we live in a bit now. This is why it's so different than one of the reasons. There are many reasons why this is nowhere near the same as the financial crisis. So anybody telling you that there's sort of a similarity or that it's the same, I don't see that necessarily. But
yeah,
I think a lot of lessons were learned by that, and I think there's still a lot of scar tissue from the last one. And I think people panicked. I think what's more fascinating, Bart, is the reaction and how fast things were rectified.
yeah. I mean,
I'm shocked at the amount of personally, I'm surprised that they covered 100% for the depositors. I mean, look, if you work there and the equity in that company and the T-bill, all that stuff that they have, like that's all gone. It's going to go to zero. Like that's not going to exist anymore. But if you're a depositor, right, you're getting back all your money, whether you had more than $250,000 or less than $250,000 in your accounts.
They had the
getting it
money in
all.
the bank. They had the money in the bank. They just outdid themselves in the investments. Like in reality, what I mean, I'm going to oversimplify the hell out of this, but
well, they don't anymore. That's the problem, right? Because people
they
pulled
don't
the
anymore.
deposits,
Right.
and now they
But
can't lend.
but if the crazy part about this, I think they had enough to actually have deposits. They actually had enough. They're off by not much, but if they did not release that PR release on Wednesday afternoon or whatever that was, this would never happen. It's like, how crazy is that? Right? Like that. How crazy is that? If they never did that, it would have been just fine.
But they were gonna have to announce at some point the risk.
But they announced it right after the Silverback, whatever that was, that happened, and then that happened, and it just went went crazy. So, I mean, it's watching it, and I have some inside baseball that I've watched, and it's definitely interesting because you look at it and you have friends who are VCs and people who work in those industries, or you have in startups, and that's going crazy. But then you don't realize how other things are tied to this, right? Because First Republic, I think, was doing some transfers between them and SVP. So you all of a sudden have this tie-in. That's why there's
they had some
there.
Exposure, but that stock's
right?
been completely overreacted to, right? I mean, the fundamentals of that particular bank are extremely good, and actually, they're nowhere even near Silicon Valley, to be honest with you, right? So they had some minor exposure, and they got kind of wrapped up in the hysteria that followed, because when people like Bill Ackman or the folks at Sequoia start going online and telling you, hey, we're pulling everything, and we're telling everybody to pull everything. And by the way, for folks out there, obviously, like the way banks make money is they take your money that's on deposit and they do things with it. They invest. And one of the things that this particular bank did was they invested in a lot of, and this is really where it's very different than also the financial crisis is, back then, the stuff that was available to buy was literally toxic assets. This is U.S. backed treasuries. This is a completely different, these bills will mature at some point, right? So it's not like they're valueless or useless. So
just the value sucks right now because everything went up,
right.
The numbers went up. I don't think it's going to come back. Like, I think it was silly for them to actually do that, but that's not on me or you to say. I don't run a bank. I don't work at a bank. So,
well, that's why depositors, right, are getting 100%. I think the analogy I heard somebody say, and I thought it was a good one, was this is like telling patients that if a doctor has malpractice, that it's the patient's fault, that they shouldn't get any kind of restitution because they still chose the doctor that was going to perform malpractice on them at some point down the line. It's the same with depositors. We put our money in the bank because the bank is supposed to keep our money safe.
right.
And if you don't know that they use your money for arbitrage and a ton of other things, then you woke up this week and you found out that was actually the case. But that's been the case for forever and ever, right? And so, it's fascinating. I think I'm just really shocked at the speed in which both the run and the speed of the reaction to fix it. And I was watching a guy, I'm going to call him out because he was on another podcast, and I thought he had a great line. I think his name is Samir Kaji, and he said, ironically, right now, if you're out there, the only places I would probably put my money are SVB and Signature. Why? The government has announced that they're 100% insured.
Yeah.
100%. There's not another bank out there right now that they've announced that for.
No.
So while everybody is
No.
fleeing these banks and putting their deposits somewhere else, the reality is if another bank comes along and probably buys SVB at a good value, and that bank is well capitalized that buys them, my guess is they're going to get a rush of deposits right back in, right? Because they're 100% secured, not up to 250, 100%. You have $1 million. The government's saying we will insure you up to $1 million.
Yeah, it's not going to be GP. It might be Schwab. But you also got to consider that whoever buys them has like 75% of startup world baked in, so it's like it's already it's totally baked in there. So it's a funny, and startups are little companies that are trying to make it.
They are, but like the startups inside of, I mean, I call them startups, but like some of the startups that, I mean, some of the companies that I saw that were dramatically exposed to SVB, like you're talking about companies like Roku, and so these are pretty well capitalized businesses.
Well, that's because of how money was in there and stuff like that. So yeah, absolutely. But there's also small ones, right? But it's funny because then you go to, talk about agencies who do work with all these startups, right? So that we have that problem where, the companies are going to try to do payroll first before do agency stuff. So all of a sudden you're in trouble in that way. The other thing is like people are like, oh, there's some of these startups should not exist, but that got overcapitalized, because the funding was easy, right? Are they going to go down? Who knows? But then it's a lot of people, then it's layoffs, then it's all that. So it's a weird, like, the idea from some people going, oh yeah, great, awesome, VCs are getting,
bailed
put
out.
on, like, I'm like, VCs get bailed out, or we shouldn't bail them out. It's like, yes, kind of, but then you have to look at what the down the line things are, right?
But they're not really getting bailed out. The depositors are getting bailed out, but the not the people who actually work there. Now, if they got their money out right before, which I know a lot of the executives and a lot of the folks did right before they started shouting at the moon about it. Good for them. But
if some of the VCs are depositors, right? Because they have their money in there that they have to. It's capital allocation and how they put capital around it.
I mean, well, if nothing else, if you're an owner and an operator, I think what it's certainly done is it's made you take a look at your bank balances, and it certainly it certainly has exposed you to some risk that probably and I'm included, right? I've been spending quite a bit of time on this week. Is we've been talking about what to do with our cash for a while and where to move it, and there's complexity to it based on whatever's on your balance sheet and how much accessibility you need to the liquidity of that cash. But it certainly, this is one of those times where a good crisis presents opportunity. All right, opportunity for your business to mature, become a little bit more sophisticated around cash management. Is it, somebody was saying earlier, I think, like, we're in this phase of humanity where we'll do anything for convenience, right? We'll sacrifice our security, we'll sacrifice our stability, well, anything, like just for the sake of convenience. And I think that's what happened to a lot of us, right? Over time, we just were like, well, get in an institution or two and forget about it. I'm sure it'll be fine. The idea of trying to spread out multiple accounts, none of which are going to total more than $250,000, so you can guarantee that 100% of your cash is insured, requires some modicum of oversight and revision, right? And so there's overhead attached to that effort.
Yeah, I mean, speaking of that, like I look at it, and I go back to startups. It's like if you have a little bit of a biggest startup, like your payroll might be $1 million. So are you spreading across 4 different accounts? Do you move that stuff for a day into it? Like, you know what I mean? Like all of a sudden you're in that world, right? You're not. Your payroll. And
certainly your employees are not going to want to hear they're getting paid by 6 or 7 different providers, right?
Yeah, how's that all, right? So I know banks, there's plenty of banks that will do that, and there's services that will make that happen. It's like, yeah, it's interesting how that gets all put together. And like how many times have you thought about this, right? I've walked into a bank and it's like, oh, FDI insured 250. Okay. But you never think about how that is actually like, oh, wait a minute.
Something could actually go wrong here.
Right, especially when you get like influx of cash when you first, when you work with clients every month and you're like, oh my God, now am I moving them around? I'm not moving around. And like, it's like, wait a minute, time out here. Maybe we should rethink this.
I think what's going to be super interesting is what the regulation looks like for the entire banking industry coming out of this.
I
And I
think
think there's going to
Dodd-Frank
be quite a
will come back.
reaction, right?
Yeah, I think Dodd-Frank is going to come back. I think the proper procedures will of some kind of Dodd-Frank that they, there's no exposure. And I think that's why they did it really this fast because, they had to do it by one Monday morning because that everything would like it already it dropped like crazy. Imagine if they didn't do anything on Monday, it would be insane. You know what I mean? Like, what happens then? Like, you all of a sudden have this run on every bank all of a sudden, not only regional or credit unions, you're going against everything.
Well, and I think that's going to be definitely a byproduct of this, even with the swiftness of their ability to ensure 100% of the depositors' money. I don't think it's assuaged the fear and trepidation, and I don't think it's reestablished a shaken confidence in the banking system, because I think there still remains again trepidation over banks just from the last experience we had 15 years ago, and a lot of us went through that, and a lot of us remember what that was like. And I think obviously too big to fail being what came out of it. I think what'll be very interesting to see is, you don't want regional banks to consolidate, and you don't want the country to really be run by 5 mega banks. I mean, that's the regional banks play a really important role. These commercial banks play a really important role in diversifying where people are holding those deposits, and that diversification is really important for not just the business of America, but the democratization of where power and decision making happens. If everybody's in JP Morgan Chase, I don't think that's good for the country. I mean, it's good for Jamie Dimon, right? But it's not good for the rest of us. So
no, not at all.
But it is going to be interesting. I think there'll be some definite finance and operational overhead that's got to be attached to monitoring this. And then, of course, it comes down to risk appetite. I mean, to your point, if you are paying $1 million a month in payroll, then this is something like operationally you've got to wrap your head around real quick and figure out what processes you may have to alter to make sure you're backstopping your risk, but also making sure your people are getting paid. It's going to be very, very interesting what happens to mainstream banking, not just at Fifth Third or First Republic or PNC or SVB. I think what happens at Wells Fargo, what happens at bank. I mean, if they start to put some more significant regulations on these banks where suddenly arbitrage is not a good business for the banks, then banking becomes what? Like water or power.
Yep, pretty much.
So
cool. Well, sir, I think we're I guess this would be a weird special episode.
This was sort of an improvisational topic, but we thought it would be definitely
some comments.
Definitely good to we covered you using bill.com. Have you had any interaction with on the client side in terms of folks indicating anything yet? I would imagine not. You probably aren't going to know until things are past due, and then I would imagine people will admit things. By then, though, things should be.
Yeah, that should be cleaned up. I think we're
restored,
fine.
Right?
I think Bill, Shopify, and Etsy, it was just really processing, and they were moving processing to other things. So that's an easier solution than trying to do payroll.
Gusto was very quick. They were very quick to send out their email and say, "Hey, your payroll is not going to be affected by this." And obviously for us, again, I think making sure our people were going to get paid first was really important. Our vendors, we'll find a way to handle that, which again, in our situation isn't a big deal. So
yeah. Jason, cool. What are you currently obsessed with?
What am I currently obsessed with? I have a book here that I'm going to promote. It's called It's Not Luck by a guy named, well, the last name is Gold Rat, and it's he has another book called The Goal. This book is really interesting. It's not luck because it is it is a book about like leadership and creating good culture and good sort of operational fundamentals within companies, but it's fiction. And the other book I mentioned, The Goal, is nonfiction. So reading something that is like finance operational based, but within the context of like a fictional story, is actually really a different and cool way to consume the content. So I'm looking forward to reading that. I haven't started it quite yet. But.
Interesting.
You?
So me, you're gonna be happy about this, weirdly enough.
Finally.
Yeah, I know. And I'm not too happy about it because I was made to watch sports teams that I don't like. So the Rangers and the Capitals game last night, but on Disney.
Oh, the cartoon. Oh, it's so cool.
Yes, it was so good. It was so good. So I watched like half of it. It was amazing. It was amazing how they did it. So if you guys don't know, Disney actually did a live broadcast of a game in a cartoon, but it was basically it was about a minute behind, but it was actually like doing the whole hockey game, but as cartoons.
The animation was almost like a modernized, what I remember, like a Nintendo hockey being.
Yeah,
like
it was like Nintendo hockey, but
it was
like
guys, big guys, like whatever.
Yeah, it was great. It was so. It was like grandma
so
was
cool.
doing one of the goals. That was great.
It's like Super Mario Brothers meets hockey. That's almost what it looked like. Yeah, it was
I know. I was like, because Adam, our friend Adam texted me, and I was like,
guest of the show, friend of the show.
You need to watch. You need to watch it. I was like, I don't want to. He's like, but it's cool. I'm like, all right, fine. I watched the Rangers begrudgingly. It's the only way I watched it.
Well, it's a great episode, man. We've got some really great guests coming up in the next few weeks. I know a lot of people are excited to come on board and join us. They've got some great topics to talk about with us in the audience, and that's super exciting. Looking forward to that.
Excited for guests. People like guests, so and it makes it easy.
They don't like us that much. I'm surprised, but
I mean, listen, who wants to hear us blab every day?
You don't know which way the wind is blowing. I can't. What are you gonna do?
Anyway, thank you for showing up, and we'll see you next time.
Take care.